So how do you really trade with the trend, and what does it mean to trade with the trend, and why it's so important to trade with the trend? Those things and many more, that's what we're going to cover in this video. And make sure to stick around until the end, because there's going to be a lot of interesting things coming that you can apply in your own trading. So we are looking at a chart here, and if you have been watching one of my previous videos, you will know that I talk about wave analysis and the Dow theory a lot. And when we talk about trends, this is usually the rhythm that the market moves. You have uptrend waves, you have downtrend waves, uptrend waves, downtrend waves. So the market always moves in waves, and behind those waves there's buyers and sellers. They are battling behind the scenes, who is stronger, who is gaining strength, and depending on how strong the buyers are versus how strong the sellers are, that's how strong the price will move. And obviously you want to trade with a bigger picture trend. Why is that so? Because if you trade with the trend, then the market moves much faster, and we can see that here right away. So what do we see here? We can see obviously the market is in a downtrend. Yep, big downtrend. And what else can we see? How do those different trending phases behave? And it's very obvious when we just when we just map out those different waves. What is apparent? What is really obvious here? It is that whenever the market moves down, whenever the market is going with the trend and with the long-term trend, it is moving fast. In a short period of time, the market is making a big move. Whereas, on the other hand, when the market is going against the trend, when we are looking at a corrective wave in a longer period of time, the market doesn't move as much. So you definitely only want to trade, or mostly want to trade short when the market is in a long-term downtrend. So you don't want to go long. So you want to avoid buying trades whenever the market is in a long-term downtrend. That's really important. So this is the first most important criteria. We need to understand that whenever the market is in a long-term downtrend, we have to avoid buying trades. So now we are on a daily chart. Let's go one chart higher. Let's go to the weekly chart. Let's go here. That's where we find our arrows. And you can see when we now add, for example, the 50 period moving average, which I am using, is you will see that here is where the market and the price dipped below the 50 period moving average. So here is where the market started a downtrend. And from this point on, you only want to look for trades into the direction. You're only allowed to trade short. No more buying. No more buying. As soon as the market dips below the weekly 50, for example, it's just one example of a trading rule. And what you could then start doing is that whenever the market comes back to the long-term moving average, then you start looking for short opportunities into the long-term trade direction. And you can see this is just so obvious that those moves that go with the trend in a short period of time, the market moves quite a bit. It is a very big struggle for the market to go against the trend, because obviously here we are now looking at a lot of more sellers, and the buyers are not in control in the market anymore. So you really have to avoid buying, and you have to make sure that you're only looking for sell trades. And then here the exact opposite happens. Let's clear this actually. Here is where the market then broke above the 50 for the first time on the weekly. And then let's go back to the daily. You can see then we only want to look for buying opportunities, because that is really where the market moves. Against the long-term uptrend, that is where the market moves only a little bit, and it's also not as fast. And there's also a lot more volatility here in those market phases. Whereas here you can see almost no volatility until the market reaches the top, or at least a very mature trend. And the market hasn't pulled back into the 50 period on the higher time frame for quite a while. You have almost no volatility. It's a very orderly market overall. And you can see that here. You can see now the market hasn't come back to the weekly 50 for a long time. So you are only allowed right now to look for buying opportunities, and then you wait for the market to get back to the 50, and then you look for buying opportunities again. And this is a very simple but very effective way of how you can start having a better screening process. So you just go to your weekly chart, put it on a 50, 49, 51 period moving average, whatever fits your criteria or whatever you want to use. And then you look for only trades into the trend direction. You look for pullbacks into the long-term moving average. You could also go to the lower time frame and then look for those breakouts out of those trending phases or correction phases. Here, short-term uptrend, then you look for a correction wave downwards, and that is how you would approach your long-term trading. So with the trend trading explained in probably just 2, 3, 4, 5 minutes, whatever, how long this video goes on, it doesn't take much longer. This is no rocket science. Leave a like, leave a comment, leave a sub, and I will have more of those trading videos if you find those interesting.